Hi, Vasudha. Hi, guys. Good evening. Uh, so I have to share the link. Again, if I do not share the link, people do not tend to join. S. Godlu, thank you for what you do, Novel. Thank you very much. So today, I'm not going to do the full-fledged I'm not going to do the full-fledged analysis. I'm going to discuss about CPI, what can happen in the CPI, and prepare for it, and then we'll take a cue how things come up in the morning. Hi Vivek. Hi Ram. The discussion is important. Lost 33 over FOMC meeting reversal. See, Ram, you need to understand, if you're not sure, do not make positions. It's better to wait and then understand and then make 1,000. It's all right to make 1,500 than to lose 33,000. It's better to wait. That's all right, Mitchell. It's fine to miss the entire sell-off. Hi, Socrates. Hi, Satish. Hi, Big Papa. Rich. Good evening. It's all right, Mitchell. Deepak. Hi, Harish. Chetan. Hi, Jeremy. Hi, Sindhu. Hi, Sridhar. Hi, Arun. Hi, Jivesh. Anish. Sri Nagarjun. Thank you, Ajit Bhai. Thank you very much. Hi, Yogesh. Pal. Hi, Ike. Seeing softly. Thank you. Thank you very much for appreciating, guys, and being here. So again, I'm not going to do a full-fledged analysis. All I'm going to do is what are the possible core thing in the CPIs and where we can take ES or NASDAQ, NQ. I'm going to talk about that. I'm not going to publish any Excel sheet tonight, but we'll talk about the levels, see how things are piling up. And if you have any questions, do let me know. I'll try to answer best of my knowledge. Again, this is going to be very, very tricky tomorrow morning, 8:30. So not sure how things will pan out. In the last few numbers, the initial move has been faked out, and then later on a full-fledged move came in. So it's going to be very, very critical. I have some long positions on my end because I have my thesis, which I posted on Twitter. So we'll see what we can do on that. So first come first, I want to show you crude, which is one of the important uh, participants for the CPI, which is the consumer price index. Let me stop sharing and share the entire screen so that we can go to the investing.com as well. So this is investing.com and economic calendar for tomorrow. I only want to filter for US, later, clear all, United States, apply. So we will go, and this is for all the people who do not understand. You see where we have 3 stars, this is month on month CPI. So we'll discuss this. This is year on year. So the core consumer price index measures the change in the prices of goods and services, excluding food and energy. CPI measures prices from the perspective of the consumer. It is a key way to measure changes in the purchasing trends and inflation. So it will not include the food and energy, but what it will include, the impact of that. For example, the crude. Crude is used for transportation. When the crude came down, the cost of transportation came down. When the cost of transportation comes down, yes, it's going to have impact on uh, prices. But again, this is not the only criteria. It also includes your rents, home prices. It includes many things like all the goods and services which are consumed by the consumers. So right now it is consensus to have that the growth in the CPI is going to be 0.6% of what it was from last month. So it is inflation is going higher, 0.6%. I'm expecting it to may come around zero point 0.6, maybe 0.7 at most. But this will give an idea that yes, we have seen a peak on month, because from June onwards, and now I'm going to come back to crude. So in June, and again, these indicators are lagging indicators. Their impact on the month, like for example, the crude went down. This is going to be shown or have a actual impact in the July. But if this goes down and it's not going up for the month of July, it means the whatever number which will come in June will be a peak, because we have seen a substantial drawdown from 123, which started from this area, 1st of June to 30th of June. So this is right in a good area. All right. So even if it comes at 0.7, I will take that as yes, I have seen the peak. I can see the prices of crude energy going down, and correspondingly the impact house pricing are also cooling off. The restaurant prices is kind of eased off. Consumer spending, which came last 2 weeks back, is tame. So consumers are not spending that much. Consumers are not spending that much. So there's less demand. Less demand meaning inflation is going to be, this number is going to be a peak out number. So future is going to be better. And market always runs on future. It does not matter what happened in the past, but what matters is what is going to happen in the future. That's why if you see many companies post exceptionally good numbers in that quarter, but as soon as they post their future guidance, the stock dumps or breaks out higher if the numbers are bad. So same thing is going to happen. CPI will come 0.7 or 8.8, 8.9. Expectation is 8.8 year on year. Month on month is 0.7. Anything can come, but the future is better. The inflation will be marked as peak, and Fed will somehow have to consider that yes, now the consumer spending is easing off, house pricing is cooling, drop in demand, supply issues are a little better, not substantially, a little better. All in all, this makes a case that yes, we have seen the worst. It cannot go worse than now, unless there is something substantial change. All of a sudden, there is a China-Taiwan war. All of a sudden, there is a big issue in Europe because now the Russians have cut the natural gas and now they're running on their own. So anything can come from that aspect. But from America, I think we have seen the worst in terms of inflation. If Europe or China does not do anything, then I think we have peaked on the inflation and we should have a better next couple of months. The company margins will be bad. So it doesn't mean that the market is going to go higher. Company margins will be interrupted, disrupted, because the consumer demand has been killed by the Fed, and all this inflation has kept uh, people not to use their money. So they're keeping that money with them, not spending, less spending, meaning less profit margins. So keep all this perspective in your head at 8:30. Understand first what the numbers are. and then react to it. All right. So this is kind of a background which I wanted to share with all of you, that yes, understand what CPI means now and what CPI gonna mean for tomorrow or the next month. All right. So let me clear this. If you have any questions around this, do let me know. I'm more than happy to share the Zoom link right away, because I'm going to keep this call very small and limited. So I'm pasting the link right there. Anybody who wants to understand the CPI or its impact, let me know. I'll try to answer as much as I can. So my case is, if CPI is less than what is anticipated, thumbs up, market will give a positive reaction. Second thing, if CPI is higher than anticipated, thumbs up, market is saying it has seen the worst and future is better. I've shared the link. Anybody who's interested or have any questions can come and join me. I will try to answer. Otherwise, I'm going to talk about ES and NQ now. One more thing. This was month on month. This is year on year. Year on year gives you a purchasing trends and inflation. This is the most important. And you see, in the last 5 years, we are at 8.6. Forecast was 8.3 and it came out to be 8.6. Tomorrow, possibly forecast is 8.8, even 9. It can come around that number. I will not deny that, but I will mark that as the worst is over. And when the worst is over, like as we say, there's always light at the end of the tunnel. I think that will come into the picture and we'll take a positive cue from that point. And if you want to see, if you go back to 1980s, 1980s also, like if you see, it peaked around 12% in 1975. It peaked at around 13 to 14% in 1980. And once it peaked, it never looked back for a substantial amount of time. So the same thing I'm saying, if it peaks here, we will have a better future. And that's what market is expecting. Now, there's one article which was shared on my Telegram channel, that the CPI rumors, I'm going to open that document. Market sinks on the false CPI rumor. And as a result, the market skidded in less than an hour. Now, one important thing is this ES. Now, I'm going to break it into, or let's take SPY, because SPY is much cleaner. I don't have after hours. I'm going to break into hours and look at this candle. This is, let's break it to 15 minutes. I'm going to show you the candle right off. This is a 3 o'clock candle. Now, 3 o'clock candle, everything was running smooth, and keep an eye on this piece. This is 3 o'clock candle. Everything was all right until here. And then if I break it down into further, this is 3 o'clock, and right there was a trigger. Now, you cannot have a manual or market-wide created cells like that. These are automated algorithms. Right at 3 o'clock, and you will see, if I add the volume, just to substantiate my proof, look at the volume. 3 o'clock, bang, 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 bang. Goes up, bang, 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 bang. There's no single stopping. It went down straight. And in the last few minutes, look at the buying here. This is 2 million SPY bought in the last 1 minute. Yes, Mukherjee, I'm expecting an upside, but anything can happen. and nobody can stop that. We just need to see if it is falling in our criteria to go long or not. We'll come to that in about a couple of minutes about ES levels and see how it is setting up. But this is all because if it was 255, I would have taken yes, it's fine. It started right at 3 o'clock, right at 3 o'clock. So this was some algorithm which came into the picture and then the sell-off started. If you convert this to 15 minute, right there. So there was a sell-off, 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 and there was a huge buying in the last 15 minutes or practically last 5 minutes where it overpowered the entire sell-off. So in the sell-off, we had this net volume, and in the closure, we had this massive volume. Now, this massive volume can be because of closing balance at 3 o'clock or 4 o'clock. We need to close the orders. Could be because of that. And if we see in the last days, look at this is the close candle at around 3:45 to 4. Look at the volume here. This was substantial. This was almost the highest volume of green in the last 15 minutes. That's about 7 million. And 2 million out of that was in the last 1 minute. Guys, give me 1 minute, I'm coming. I'm back. So, I hope this gives you a clear idea how things are panning out. Now, let's come back to ES. Because ES has after hours, so I didn't want to include the volume, but let's even do that. Look at the volume here, 345. That's the volume of 138,000. And it's a substantial volume. If you further break it down into, let's say, 5 minutes, you will see these are all buy, because the price went up. This was right from 3804, which was the area we thought that, yes, it's an area where we could see some buying. And that happened from yesterday's level. Like if you go here and you see 3800 was my target, below 3855, it came to 3800 and then boom. So I'm looking forward that, yes, this substantiates into further buying, but let's see. So I assume this was a sell-off just to create panic right at 3 o'clock, and this was a substantial buy. 5 minutes, almost 75,000 volume. And right now, the net volume in the last 4 hours, 4.5 hours, is around 40,000. So 40,000 volume in 4.5 hours is overtaken by 5 minutes of the last 5 minutes ES trades. All right, so somebody was raising the hand. Yes, Mr. Zoom user. You can speak. I unmuted you.
Hey, Naval. What happens if CPI comes like 9% plus?
As I said, it's worse is over. How would you treat that?
Do you think? I guess would the drop be observed in the futures market? If so, how would it
need to understand? I just explained that in the last 20 minutes. How would you treat that? You are sitting in an exam and you think that the most difficult exam you wanted to clear is gone, and instead of making 100 out of 100, you cleared that exam by 40%. Now you know the next exam you can easily score 70 to 80%. How would you feel?
Feel happy.
Same thing here. If we know that, yes, worse is over, now things are going to be better, how would the market react? How should the market react?
if you go, it should fly. But the reason I'm
Not
asking this
fly, but
question,
it should have some
at
confidence.
least it should see some bump. But
Yes.
the reason I'm asking is because today, well, it's because of today's, I guess there was a sudden drop and then it didn't drop.
I just explained that why.
Yeah, you did.
It
But
was algorithmic trade. Again, it's my understanding. I could be totally wrong, but that's what I see, and the
no,
volume substantiates that.
I was talking about the morning sell-off. I thought it would start selling from 3863 or 3864, but I didn't expect it would. I thought it would go all the way down to 3800 at that time, but it kind of stopped at 3838, and then it went up, and then there was the algorithmic sell-off. Would there be those kind of games? That's so how to save ourselves from that kind of.
Don't trade. Wait until clarity.
Yeah.
That's it. There's no way. See, there's no rule book in the world which is telling you have to trade every day. No. You need to trade when you are confident. You need to trade. Like I've explained this theory multiple times, that treat market as ATM. When you want to go, when you need money, you go to the ATM, take the money out. You do not live there. You do not go every day. You only go to the ATM when you need money. Come to the market when you know you want money.
Okay.
If you start doing that, like I used to trade so many trades every day. Now cut down, maybe 1, 2, maybe 3. If it is not working out, it's not working out.
Okay.
Krish, I know, looking at your comment, I don't care about what White House said. Last 2 times they said, and it was totally opposite. So I'm okay. Previous to the last time, Chris, they said it's going to be high, and it was lesser than that. So assuming everything, I still feel we are going to get higher. Again, I work on my data. I do not rely on anything else. If I am wrong, I'll be wrong, and I'll change the direction. I have no issues. If we break certain numbers, 1300, I have another level to go down. I'll kick that direction. It's not hard and fast that yes, I have to be very positive on the market. No, I'm looking forward to just the levels, and if the levels play out, I'm doing well. And as of now, you would all have realized each of these levels are working significantly well if you use them. If you look at 3855, it was a sell-off, came all the way next to 3800 and bounced. Same thing, like I told about BA for so many days. We got the very big move today. So the news will come, but the market is already set up for that. It's not that the news will come and market will start to catch up. No, it never happens. All right, and in the ES right now in 30 minutes is setting up for a morning star. Anyways, someone also had a hi Adi.
Hi Naval Bhai, appreciate your genuine interest to be a teacher, and this was very interesting that you. Now I have two questions. Maybe one is an observation, other is a question. Your hypothesis that this was kind of manipulated. We both being computer science people, we
not manipulated.
No, okay. But how do the sudden drop?
You can even set algorithms if you know how to write the code. You can set up algorithms in the ES. When certain criteria comes, you can trigger that. That criteria could be a price. That criteria could be a time. That criteria could be an event.
Fair enough. I understand that. Okay, and you also showed us that most probably it was algorithmic trading. Pretty much that was going on.
Yes.
But what is the inference we can draw that for the last hour it was going like straight down, and then in the last 10 minutes, there was huge buying. What is the inference to draw? What's the learning here for us?
Arey bhai, I just explained that it was just to create panic, shook off the weak hands, and then buy.
So वो manipulation ही होगी ना? In a way, that was manipulation.
See, if things doesn't work in our way, it's not called manipulation.
Okay.
It is market.
Okay. And the second question is, you talked about peak inflation. Now, there is also a school of thought that says that the peak will not just be a peak, it will remain sustained peak, like it will be plateauing at that peak or hover around that. Any thoughts on that?
You can never have inflation plateaued at a level. It will peak, it will ease off, it may sustain at around 6%, possibly, but not at these percent. If America is going to have inflation at this level continuously for the next few months, it's going to be a disaster.
Why?
People will not be able to pay out their rent. Rents have gone higher. The simple cost of eating has gone higher. Like if you want to buy 1 meal, 2 meal, or 3 meal, it's gonna go. It's already has gone higher. So if it will not drop. People are getting laid off. It has started. There are jobs, but people are not ready to go to the jobs. They want to take the free money which is available from the unemployment quota. So it's going to be very, very difficult.
Okay. So your guess is it cannot plateau at the peak. Okay.
No, that's why it's called peak, because it's peak.
I understand. Okay. Okay. Thank you, brother.
Yes, Ramesh.
Yeah, Navalbhai, so if the numbers are good or bad, what time you like to start trading?
9:30. I have stopped trading futures.
Okay.
I've stopped trading futures because it's very difficult to trade futures in this market.
Okay,
it may even go down to 37.70 and all of a sudden 37.50, and then it will bounce.
Correct.
Can I capture that trade? No. If I've been lucky, I may do 10 points, but that's luck. That's not my analysis. That's not my work.
Okay.
So I'm not lucky. So I'm not trading futures.
Okay. And once you got the numbers, you will start immediately trading at 9:30, or you'll wait for something?
See, first I have to understand what those numbers are. 8:30 to 9:30 will give me an idea. I will read about that. I will understand what are the impact. Supposedly numbers come worse at 10%.
Yeah.
Right? That's a horrible number. That's outside of the world. That is an indicator that yes, the next numbers may be 9, which is still higher than today's. So that will give me an idea. I should not go long in the market. If the number is about 8.8, 8.9, so with June, where we had the high crude, high energy, their impact, high rents, everything was high, stays at 8.9 or 9-ish. Now I see the prices cooling off. Costco, the gas is going down. Like when the gas goes down, everything translates into ease off. Like the cost of transportation comes down, and America runs on transportation. It doesn't run Dunkin'. So everything is transported from one side, east to west. If cost of transportation cuts down, that's the biggest chunk in the inflation. Because if the raw material which is providing or the supply of products which is consumed across the US will cool off, prices will start to cool off. So if it comes around 8.9, 9-ish, I think the next numbers will be much cooler than that. Looking at the current circumstances, I'll be happy. If it is 8.7, so it could not blow away 8.7 with this numbers in June. Next number is going to be much, much lower. That gives me a positive. Only in a very horrible case, market is going to go tank.
Okay. Already from 2 days, almost 100 points gone, right? So there is a positive that market already corrected if the numbers are within the range.
And
Okay.
I'm gonna do now the ES levels. Right now, let me remove the volume for now. So this is the impact. Now, if you want to call it a beer flag, sure, it is setting up a beer flag. But I also gave you one more thing. If you draw from the bottom here, draw the lines and draw here. It's in this range only. And even now, you see it came and bounced above this. This is setting up if it captures 3845, 3855, it invalidates the beer flag. The beer flag is if it breaks 3805, it breaks this low, is gonna go down and make the new lows. So guys, keep an eye on this. Right now, this is setting up as a beer flag. Okay, if we lose today's low, let's clear 3800. If we lose 3800 tomorrow, I'm not talking about the initial down move at 9:30 a.m. If we are below 3800, I have one support at 3750, which is right here, which is the green line. It may stop there. If it doesn't, we are going to make a new lows. As simple. If it bounces off, it invalidates the beer flag. We go above 3855, we're going to hit 3908 and 4009 in straight line, because this will come right here. This will extend and we will see right here the 4000 number. So both sides are open. Market is pretty intense. The levels are crystal clear. 3800 is a confirmation indicator for the down move. If we have 3800 on the downside, go short for 3750 and the new lows. And if 3855 is reclaimed, there's no need to short. It's just go long. And that long will carry forward to the end of the week. The same thing with the short. If short breaks down here, it will carry on to the short side. Yes, Sabarbal, I do trade until 9:45.50. I know that. Thank you. So this is about ES. 3805. I will post this in simple pointers. 3800 goes down, short it. You can short whatever you want. Above 3855, go long. Now, for the people who do futures, there is a possibility that the initial move comes down to 3750. And oh, 3750 is gone. Right at 830. But it comes down. This is the support. If it takes the support and comes back above 3800, it means it has tested the support. Now it should test the resistance. It's going to test 3900 then. One very important thing to remember. Once you lose an important level, if you lose, you should go and test the next important level, which is right here, 3750. If you test it and reclaim it back, it means the initial pressure of that move is gone. And this is called fake breakdown. Fake breakdown or fake breakout in case of moves go higher. Now, supposedly in the morning, it goes to 3855 at 8:30, and it's an important resistance level. If it fails here, comes down, and then go below 3800. This means it tried to go to 3800, found the resistance. So this initial breakout was a fake breakout. It has come down, taken down the important level of 3800. Now I'm sure I should go and short it, and I should hit 3750. So I've explained both the sides clearly. about the fake breakouts for the people who are doing the future, and a clean move once the 9:30 clock hits the bell. All right. I'm not going to focus on anything else. ES is by far the more clear option for me. So I'm going to use that. I'll try to do on, anyone has any questions around this? I'm happy to answer. I've shared the Zoom link if anybody's interested. I can again post that. Those people who have joined later, I can post that. Where is the Zoom? It's the link right there. This live event is over. No, live event is not over. Oh, this is over. This is the link. I've shared the link if anybody wants to go and want to discuss. Yes, Ramesh. You have any question? You raise your hand.
No, Naval. I already asked. I'm good.
Can you lower your hand? If anybody has any question, please. And this is what I posted. There's no need to use all these indicators. There's no need. If you simply know trend lines and if you know Fibonacci, there's no need for any fancy indicators. Not at all. These candles give you the live price action. All these indicators are lagging indicators. They will never give you the real-time information. The price will tell you everything live. Adi, you have any question?
Yes, Naval bhai, do you look at the VIX?
No. Again, this is a fancy thing which people have started using VIX. VIX is nothing. VIX is a derivative of the equity option movement, nothing else. It's created, it's derived from the equity price. It's derived from the price of all the options across the board.
Okay. And secondly, if the ES is trading between 3800 and 3850, then you will not trade.
Yep. There's no point to trade. Let the market find its own direction.
Okay. Even if it stays in that range for 1 hour, 2 hours, no worries.
No worries. Let it stay. See, but we should not have rushed. See, one simple learning which I have made, that there's no need to rush into the market. Market gives you opportunity almost every day throughout the day. See, I talked about BA for last few days. I did not enter BA unless it was 146, and I wrote it for 149. I still had the opportunity. Yes, I could have done much better if I entered at 140, 142, but that's all right. Market gives you opportunity. You just need to understand that you are not going to be right all the time, and market is going to be right always. So it's better let the market find a direction, clear its head, and then you just help yourself along with the market.
ठीक है भाई, thank you. This was very good learning.
Aditya, ES correlates with SPX. Yes, SPX is the index and ES is the future. They're always related. SPY is related to SPX. Yes. What is your outlook on DXY? High dollar is bad for the sector. True. What will happen? That will happen tomorrow. Tomorrow, inflation numbers will define outlook on DXY. But if we want to take a look, DXY, it's right there. Okay. So let's create a regression channel first. And I'll show you exactly at 108 in 2000 some period, it peaked out. I remember because I was in England and it was 108 at that time, maybe 2010, 2011. Yeah, it's 104, 105 in 15, 16, and right there. So it's kind of in 20 years. If I take max month, the dollar index is right there. It has a W in the monthly candle, and that's why from 100 and above, it's rolling higher. Now, depending on the situation tomorrow, you see, we had a evening star set up on Dixie. That's a very good confirmation of anybody who wants to trade the dollar index. Now, we will start with a very simple example of how to make Fibonacci extensions here. This is the line where we find the support, latest one, otherwise these are above. So I'm going to draw right at the bottom, and let's see how good these extensions will come up. We'll start from here, go on to the top, come back right here, and look at this. It's showing the peak. If I clean it up and make it much more number specific, the low here is 101, 44, 101, 73, 141. High here is 105.05, and the low here is 97.69. Yes. Now I have done this. Look at the Fibonacci extensions. It started from here, went up higher, came down. It peaked right at 108.70. It's 108.60. Now, more you look at it, the more confidence you will have. It has started its rally right from this point, this trend line, and this was 103. It's right up, have a doji in the top, and I've explained 100 times about the evening star. We are seeing a blue arrow on the downside and it's going down. If we hit 107, that will become an evening star, and boom, you will see the market go higher. So one more confirmation, if evening star comes out, excellent. Mukherjee, I'm not doing any tickers today. It's just only on index. Hopefully this will give you much more confidence. And look at these Fibonacci extensions and the beauty of it. Look at this. It's getting stuck here. Bounce, bounce, close, open, close, high. Once it break out of this area, it's stuck right at this area. It took the base, cleared this area, 61, and bang on. It's stuck at 78. Tuck, tuck, tuck. Now it is right there. That is the beauty of Fibonacci. If you need Fibonacci, use them properly. They are available into the market, into any tool. Use them. They will give you a very clear idea of how things will act, react, whatever you want to call it. My bets is on long side. Confirmation US dollar, confirmation 3855, confirmation what do you call confirmation on the last 15 minutes of trade. So I have that confirmation plus the logical scenario which I posted on the Twitter. So I have everything to vouch for the positive side, even if that entire piece comes out to be wrong, and that is possible. I'm happy to go short. I love to short because it's the best way to make money as compared to go long, but I need to have a rationale to go short. That's it. So this is my clear idea of what I'm thinking, what I'm believing in. And for me, it is setting up a evening star, 100%. If things work out tomorrow as is, you will have one important lesson to remember. All these things are defined in front of you. I'm not using any indicator. I'm not using any news. I'm not looking at any option flow, this and that, just the clear price action. And you will see this red candle is going to grow. It's going to come down to 106 and then to 104. So if you like the concept which I explained, do one thing. I'm going to post this information on Twitter. Like it and share it. It's not going to charge you something. But if you can do that, more and more people can use it, because the idea is to understand the macroeconomics. I've seen so many people lost a huge amount of their 401k. I explained to them in December, this is going to happen. People ignored it. And there are many people in my list itself who are here, who were participants in that meeting when I did that. I explained the importance of ECB. People hardly understood ECB. And since then, market has died down. Now, fundamentals are suggesting something now. I'm going to take a cue and trade according to that. Right or wrong, let's see it tomorrow. All right. Anyone has any other questions? Otherwise, I'm dropping off now. And thank you for being with me on this YouTube Live. Anybody from the Zoom have any questions? Nope. I'm going to wait because it's a lag. So I'm going to wait. Gold will go up if dollars goes down. Thank you, Mr. Big Papa Rich. Thanks, Vivek. All righty. Nobody has any questions. Good night.